Welcome to our daily Forex market analysis, and this is for trading on May 29th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. So in terms of the data here, it was a mixed bag today. Overall, the market is in a very much risk on sentiment, so risk positive sentiment. We have seen stock market basically break through resistance levels, and it has been it's been going up. So for the time being, we are still looking at that. Now, a couple of developments there. We have talked about China passing the regulation in regards to Hong Kong, and we have seen unrest in Hong Kong, protests and so forth against that regulation. So today we saw that President Trump made an announcement saying there will be special press conference in regards to that tomorrow, and as a result of that, we did see the equities markets drop a bit, but I'm not sure how strict those sanctions will be at this point. They may just be mild, or they may just be a little bit of a change in terms of basically how things are applied to Hong Kong. So Hong Kong will, of course, lose its status as an autonomy. And other than that, we'll see what comes out of that. There may be sanctions against some companies, some Chinese companies, as well as Chinese officials. We did hear that US was going to revoke some of the visas for Chinese students and anybody who was basically attached to the military regime. So we'll see how all of that plays out. But for now, the equities markets are basically looking at positive sentiment in terms of the economies opening up. We have not seen a big jump in the number of coronavirus cases as a result of different economies opening up. And by June, essentially, we should have a lot of the businesses back on track in terms of being open. And then we'll see from there how the business proceeds, basically. But for now, all of that is looking very positive. So the only risk is basically the sanctions from the US. But at this point, market does not seem to be taking it too seriously, and they're not too concerned about it, even though we did see that drop. So going into Friday here. Now, just to keep in mind, Friday is also our month end here, and month end is when the big hedge funds and institutional traders will rebalance their portfolios. And for the last little while, we have seen month ends have been positive for the equity markets, and we have seen basically US dollar and yen crosses, yen and US dollar weaken, which means the crosses have gone up as a result of that. So keep that in mind. So if we are still back into the risk on sentiment, then we are likely to see the US dollar crosses and yen crosses go up as a result of that. So in terms of the data that's coming up, we have a fair bit of data here. Out of the Eurozone, we have CPI numbers, core CPI numbers. At this point, they are expected to be relatively similar to what the previous numbers were. Excuse me. So at this point, any of the positive data is having a positive impact on the market. But the market is basically disregarding any negative data. So if the numbers don't quite match the expectations, I am not really expecting much of a drop in the markets. But if they are better than expected, that will be good for the equity markets as well as good for Euro. And then we have GDP numbers, monthly GDP numbers for Canada here. Now, they are expected to drop, of course, because everything was closed. But as long as the numbers are somewhere in this neighborhood of what the forecasted numbers are, we are likely to not see much of a difference from there. And then we have personal spending, trade balance numbers here. Again, the numbers are expected to be negative. But again, as long as they don't miss by a huge by a huge number, I think it will be fine. And then Chicago PMI numbers here, it's expected to be better than the previous number because, of course, the economy is opening up. Now, the PMI numbers have been coming better than expected. So if it's bigger than this one, then expect the stock markets to go up. Same thing for the consumer sentiment numbers. If these numbers improve, that will be positive for the risk markets. And as a result, we are likely to see US dollar drop and the equities markets go up. We also have Pavel speaking tomorrow. And at this point, pretty much everything has been said previously by either by Pavel himself or other members of the Fed. So unless there is a change, I wouldn't expect it to make much of a difference. Today, we did hear from Kaplan, and he said that basically the economy has bottomed out. And essentially, that means that we're likely to see a recovery, and some of the FOMC members have said that the recovery is likely to be quicker than what was previously forecasted, and all of that is again feeding into the positive risk sentiment. Now, only other thing is we'll have President Trump doing a conference at some point. Now, there will be, that's where I think we are likely to see market react to that. So we may see the stock market drop, and as a result of that, our US dollar crosses are likely to drop and yen crosses are likely to drop, but the impact may not be, may only be short-lived. So that's something we'll have to see, but it will add risk to the market. So it is a concern, that's something that we'll have to pay attention to because it will create volatility in the market. All right, so let's go on to our charts here. We'll start off by taking a look at our euro dollar here. So euro dollar looking very positive. We did have a nice move to the upside here, right into the resistance level. So bias is bullish here still. And in this case, I would look for a bit of a pullback and then a further move to the upside here. So bias is bullish for euro dollar. In terms of the pullback, we may get a pullback into 1.1050 and then a further move to the upside like that. So bias is bullish for euro dollar. And in terms of the targets, first target would be the high of the day, which is 1.11, and then a 1.1150. So bullish bias here for euro dollar. Pound dollar here, this one has been trading in a range, but today we do have a bullish candle close here. Now, should the price or the risk on environment continue, this is likely to go higher as well. I would look for a bit of a pullback here, potentially into 1.2280, and then a further move to the upside here as well. So bias is bullish, and first target will be the high of the range, this where it's been trading right now, 1.2365. And second target here is 1.2465. So bullish bias here for pound dollar as well. Aussie dollar here, this one's done quite well as well. Now, today's candle close is neutral again. Yesterday's candle close was neutral as well. So Australian dollar is being weighed by the China-Australia trade relations problems that they are having at this point. So it has not been as bullish as we have seen euro. Euro, on the other hand, is more positive right now because the stimulus package that ECB proposed was bigger than what was expected. So there's a lot of positive sentiment in regards to euro, and which means that the recovery is likely to be quicker and better in the eurozone. So all of that is positive for euro. Now, that package does have to be ratified. That means they have to be approved by different member countries. But I think that should not be too much of a problem. However, as we go through that process, we'll see if there are problems that can prove to be negative for the euro. For now, though, everything is looking positive. So here, this is neutral here. So what I'm looking for here would be a bit of a pullback. So it looks like it's pulled back already here, and then a further move to the upside. First target is 0.6680. And then above that, we are looking at 0.6750. So bullish bias here for Aussie dollar. Neutral to bullish bias, I should say. New Zealand dollar here, this one as well has been trading in a range. Now today we did have a bullish candle close. As we can see, price came into this previous support resistance level and then moved higher from there. So I would look for a bit of a pullback here again, and then a further move to the upside. As long as it holds above 0.6170, this is going to be bullish. So for now, bullish bias, first target will be the high of the day, which is 0.6235. And then above that, we are looking at 0.6280. So bullish bias here for New Zealand dollar as well. Dollar CAD here, neutral move for the day here. We haven't really seen price do much today. Very small move here. Part of the problem was we saw that the oil had dropped earlier in the day, and that wasn't too good here. But with dollar CAD, bias is neutral. So I would look for price to potentially retest the bottom here at 1.3720. And if it holds above, we're basically looking for price to go higher into 1.3820. So for now, the bias is neutral for dollar CAD. Now, should it break through the support here, the next target is 1.3680. So for now, I'm just looking for price to go sideways here. Let's take a look at our commodities here. We'll start off with silver. Now, silver has been trading in a range, as we have seen over the last few days. It is still trading in a range at this point. Price was into resistance today, but there is more room to the upside here. Today's candle close is looking kind of neutral. So we could see move higher. If the stock market moves higher, I would look for price to move higher here as well. Target will be this resistance level at 17.60. So for now, bullish to neutral bias for silver. Gold here, gold has moved higher today as well. So there is bullishness in price. There is also a pin on the top, so we have to be careful. I would look for price to go higher into to retest the high of today, which is 1727.50. If it holds below, watch out for that move back down towards the bottom of today's candle. But there is bullishness in it, so we could see it go even higher. And next target here is 1738, so bullish to neutral bias for gold as well. Oil here, oil has been trading in a range for the last little bit. And today we saw price move in both directions. We saw that drop initially and then a move higher. So if from the daily perspective here, this one is still range bound. Now we do have a bullish candle close, which means we could see price move higher towards 35 area. So bullish bias in that regard. And only if it goes through that would I look for next target, which is 36.60. So neutral to bullish bias here for oil. Copper here, copper is neutral. There is some bullishness in this candle, but for the last couple of days, it has been going sideways here. At this point, I would look for a retest of the high of 2.38, and should it go through that, our next target is 2.40. So for now, bullish bias for copper. Bitcoin here, Bitcoin is also making its way higher. In this case, next target is 96.35, and above that, we are looking at 98.85. So bias is bullish for Bitcoin here. S&P 500, this one is interesting. We have seen price go up quite a bit. Now, it is dropping at the moment, but that is because we are waiting for reaction from China. in regards to what we heard from President Trump. So back to if China is has some strong words or talks about strongly about retaliation, that could have a negative impact on the market and we could see a drop. The candle close for today is neutral. In this case, what I'm looking for is a retest potentially here, a little bit to the downside, either into 3017 or into 3000. So let's say a pullback into 3000, and if it holds above that, we're looking for a move back up. So the market hasn't turned yet in terms of the risk sentiment. So we'll have to see what happens tomorrow. And like we have talked about, rebalancing of portfolios. For many months, we have seen that price has gone up into the month end. So we may see another move higher after a pullback. So do keep that in mind. So for now, neutral to bullish bias here for S&P 500. Nasdaq here, Nasdaq is looking neutral. We see that for the last couple of days here, price has gone sideways and it's been trading in this range here. So at this point, I would look for a bit of a pullback, potentially even into the low of the day here, into 93.20-ish level. And if it holds above, they're looking for a move back higher. Potentially even towards the top of the range of 9600. So for now, neutral bias here for Nasdaq as well. And then we have Dow Jones here. Dow Jones, actually the candle close for the day is bearish, but a lot of that happened in the later part of the day after that announcement from President Trump. So again, if we see that things escalate in the Asian session, that will be risk negative and we could see this drop. So for now, I'm looking for a pullback into 25,165. And then if it holds above that, so I'm looking for a retest. If it holds above, then we're looking for price to move back higher. So for now, bias is neutral to slightly bearish here for Dow Jones. All right, DAX here. This one also dropped a bit right into the close. So for now, looking for a bit of a drop here back into 11,500. And then if it holds above that level, same thing, looking for price to go back up from there. So for now, bias is neutral here for DAX as well. FTSE here, FTSE as well, we have a neutral candle close. Again, we did see a drop later in the day. So bias is neutral. We may get a pullback back into 6080 level. And then if it holds above that, again, we are looking for a move higher from there. So it really depends on the risk sentiment and what kind of words are exchanged between US and China. And then last of all, we have Nikkei. Nikkei did have a nice bullish candle close, but again, as if you take a look here, later in the day, price did drop here. Now I would look for a pullback either into 21,700. That's a good pullback level, or we may get a little bit of a deeper pullback into 21,600, and then price may go up from there. So for now, bias is bullish, and target would be 22,000 for Nikkei. And should it go above that, we're looking at 22,250. So bias is bullish here as well. All right, so that's it for tomorrow. I would expect volatility in the market, so please be prepared. It looks like the moves are quite thin and market is quite jittery right now. So please be prepared for volatility, especially with this risk on mode combined with this these problems, geopolitical issues that we are seeing right now. All right, so that's it. Have a wonderful trading day, and I will see you again later. Bye for now.